If this is your first time attending 3 at 3, we are very happy that you're here. And I think you're going to enjoy today's presentation, which starts right now. This is 3 at 3 for the 2nd of December, 2020. Final month of the year, folks. Our disclaimer is, as always, that this is for educational and informational purposes only. We are not presenting this as an advisory. So please understand that all investments involve risk, and make sure you understand that we have intellectual property on virtually everything you're about to see. Registered marks, trademarks, patents, copyright on virtually everything you're about to see, which we encourage you to share. Please ask us, though, before you present this in a public forum. And then, of course, after we grant you permission, please cite Market Rebellion as the source of this information. Well, here was Micron yesterday. There it was. It had a great day. It was up almost 6%, 67.88 when I'm talking about it there yesterday, as you remember, on CNBC's halftime report, which I will be on again tomorrow, by the way. Some of the same cast of characters. I think Josh is on with me again tomorrow. Here's how Micron has moved. It's up another 3% today, over $69 a share. Bang! You knew that was coming. And this one continues to perform to the upside. We really appreciate all of the nice emails you send and the questions that you pose to me and to our 3 at 3 moniker on Twitter. So thank you for all of that, folks. If you'd like to learn more about trading stock, options, futures, cryptocurrencies, we do it all. And you can learn about it from experts in the field. The two guys who are the primary drivers for our crypto room, by the way, we have a crypto chat room, we have charts, which is on the app in the Apple Store. But those guys used to have 50 rigs, I think, in their dorm room in college 4 years ago. And they were mining Bitcoin when it was in the hundreds of dollars. So these are two guys that really kind of know what they're talking about and have helped make a lot of us a lot of money. If you'd like to learn about crypto, futures, stocks, options, technical analysis, go to marketrebellion.com/get started for more. Also, by the way, today, in just under an hour, my brother Pete will be on with Ryan Mastro, one of our head strategists at Market Rebellion, and he will be talking about best strategies, patterns, it says here, for unusual option activity. The two of them will be on for an hour free webinar, completely free. No credit cards taken, nothing like that. You just have to register. You can do that at marketrebellion.com. So please think about doing that. Again, marketrebellion.com/webinar gets you in to the site for registration. And let me just see here. There we go. Now let's get to today's presentation. How about this one? Cliffs. CLF. This one was pretty darn new, as you see there, about 2:46 Eastern Time. We started blogging about the April 14 calls. Stock was trading 12.37. April 14 calls were bought for $1.14 to $1.25. So what does that mean in real terms? Well, that means that $114 to $125 for each and every one of those 1.1 million share equivalent, because again, every option's for 100 shares of stock, so 11,000 options means 1.1 million share equivalent they could control. As I always do, I bought at the monies and sold the out of the monies, 1-to-1. If you do it 1-to-1, you have no upside risk. If you decide to be a smart guy, smart gal, and you want to do a 1-by-2 spread, that's the deep end of the pool. I don't like going there because if this unusual activity results in a pop to the upside that is extremely significant, you will end up losing money even though you got in on the right side of it. You can't do ratio spreads just to cut your cost basis down without having more risk. There is more risk in that ratio spread. That's why I do them 1-to-1. I have up to 35, 40 positions on at a time. If I did ratio spreads, I don't think I could keep it under control. So that's the way I trade. You got to decide what's appropriate for you. Stock 1237. There is Cleveland Cliffs still in the same spot with, hopefully, a lot of upside here. As you see, you could have picked it up for sub 11 not too long ago. Now it's 1234. Bang. Second of our 3 at 3 is IQ. IQ, Chinese internet stock. IQ trading for 22.87. They're buying 25 calls. What do you think I did based on what I just told you? If you said, boy, I bet John's buying the at the money calls, you'd be right. That's what I do. I buy the at the money call. In this case, could be the 23 calls were the heaviest ones that I purchased. And I sell those end of the year, because notice that 31 in front of December, that is key, because that means it's the end of the year that those options expire. They don't expire the second or third week of the month. They expire December 31st. So you have all the way till the end of the year, call it 29 days, give or take, right? 29 days until these expire. So they paid about 52 cents for these. You could buy those at 52 or 60 or 70 cents. I'm not saying that's a bad deal. And if stocks gives you a pop here or there, you'll be selling them for a lot more than that. However, I am moving the odds into my favor by buying those 23s, selling higher strikes. That's how I like to play. That is our second of our 3 at 3. You want the final, the third and final of our 3 at 3? And then we'll get to some of your questions. Let's do it right now. Final of our 3 at 3 today. First of all, there's the graph again. 22.69. It was 22.87 when we saw it here. You see that pop there? Well, before we get to the third of our 3 at 3, I have to tell you that if you want to follow unusual option activity, you can be a subscriber, which means you get them before us. Before we get in, you get the email alert. You get access to a password-secured website on Market Rebellion. And in fact, if you want to learn more about all of it, just go to marketrebellion.com/UOA. That is marketrebellion.com/UOA. You will be getting these as we do them. I think yesterday we had 35 different trades. If that's too many for you, and again, you can pick and choose whichever ones you want to react to. And I would, in fact, recommend that heartily rather than just willy-nilly going with every single one of these, because some of you will be somewhat expert at different sectors of the market. And you probably want to follow those, quite frankly, folks, the ones that you are more expert in. So, marketrebellion.com/UOA. Third of our 3 at 3 is Penn. So, I think we all know somebody who's got a lot of Penn stock. That somebody would be Dave Portnoy, Davey Day Trader Global. So, DDTG, somebody comes in and buys 4,000 of the December 80 calls. They paid $1.50 for those calls. Notice how there's no 31 in front of December. This is not end of the year trade. This is regular December, which is 2 weeks and 2 trading days into the future that these options would expire. Stock's 72.60, and they're buying the December 80s. Now, do you think I'm buying an $8 out of the money call, give or take? No. I am buying a lower strike and selling a call 1-to-1. That's what I do. Many times when people are buying these way out of the money calls, they have huge home runs. They bought it for $1.50, sell it at $4.50, tripled their money. That's not the way I play, though. I play to move the odds into my favor, and that's why I'm telling you that I buy at the monies and sell out of the monies, almost always. All right, let's look at this one. There it is, 71.20 right now. So I guess you'd probably feel better having a call spread on where you address both time decay as well as volatility compression, wouldn't you? Let's get to your questions. Diet Dr. Pepper, by the way. cream soda. Delicious. All right, question time. Okie Data, OKTA. CTBRECHEISEN asks, hey, John, ask a stock. Do you feel OK Data is a good choice for a long-term portfolio? Yes, I do. I like OK Data. I like OKTA. Sorry, I'm calling it OK Data. I'm sorry. Old habits die hard. Nonetheless, OKTA is a good choice. Yes, it is. This stock, though, if you look at the graph, you will just be thunderstruck at the graph because you will see the stock below 100. You will see the stock just over 100. Now it's over 200. So I'm just saying I would be very careful, even though I like it for the long term. It has had an incredible run. Not saying you sell it, just saying I own stocks like this and stocks like this. I don't own this one right now. I like to have a put snugged up underneath, a put option that will protect my downside so I lock in as much of those gains while letting the long-term capital gains continue to build. There's the chart. There it is over 230. And as you see, just back in July, it was under 180. Lion versus dog. Okay, KWORILEY asks or says, on safari with Dr. Jon Najarian, look great, but where's the pet lion? No lion, just a big Bernese mountain dog. You see him there on the right side of your screen. That's Dexter. Dexter is one of my best friends in the whole world. Great dog, fun dog, and I've never had an incident where he has gone after me, like, of course, happened, sadly, with Siegfried and Roy and their pets. So no lions, but big, beautiful Bernese mountain dog, Dexter by name. Pfizer. Okay, 3 at 3, UOA. In Pfizer Jan options, already cut in half after officially doubling yesterday. Any time frame to hold into other than half, or is it just a feel before January expiration? I believe what Paul's referring to here is that I take off half on a double. I did take half on this one on a double because as the options move up, I want to pull some of that money off the table and let it continue to work for me. So that's what I did here. Cut the position in half, just like Paul says, and any time frame to hold for the other half. Paul, what I normally do is if it starts pulling back like 10 or 15% under where I just took off half, I'll exit the whole position. Just get out. Or alternatively, if it keeps running up, I'll sell an at-the-money call against it to both collect an option and give myself a little insulation to the downside and take in a little more premium so that I can make more money. So that's the way, Paul, that I like to trade it. Thank you for asking. Call strategy. Okay, Mitchell, dyslexic. Mr. Josh Mitchell asks, do you ever buy back covered calls you sold? Or do you just sell puts the next week to collect premium? I do buy back covered calls. In particular, and I answered this one, I think, Josh, to your question on Twitter as well. I like buying back calls once they cross the strike price if I continue to want to hold that stock. The example I used, which is still valid, is Apple. I might use it also for Microsoft. I might use it also for Netflix. There's a bunch of stocks that I want to continue to hold for a long time. Square, things like that. And I get long-term capital gains out of that. And once the stock crosses the strike price that I've sold, I like exiting the calls that I've sold, buying them back, and selling out a higher strike or an at-the-money it further out in time. And I have found by doing this that I end up making a lot more money and giving a lot less back to the tax man because I'm in long-term capital gains on my stock. The option gains and losses are short-term. So you can match up short-term option losses, of course, against option gains. However, the long-term holding of that stock as long as you don't violate the terms of that, means that I get long-term capital gains, which are nearly half of what the short-term capital gains are. Bang. Now let's get to PayPal. Yesterday, our service flagged 3,600 PayPal weekly 220 calls for $1 to $1.53. Those calls quickly traded to $4.25 this morning. Bang! That's right, bang. I'll take a quad or at least a tripling of my invested funds right away, and I did. And since they were weeklies, I am out. I didn't even wait around. I am out. I still own PayPal in my stock portfolio, and I've written calls against it on this pop. However, I took this trade off because it was such an explosive trade. And yes, JLUCENA 81, that's what I'm talking about. Bang! Triple. Bang, bang. Thank you. Thank you for watching, folks. I hope you have a great day. Remember, you can learn more about unusual option activity by going to marketrebellion.com/UOA. Also, remember that my brother Pete is joined by Ryan Mastro. He will be on with Ryan at 4 o'clock Eastern. That's 3 o'clock Central. He will be on talking about patterns for unusual option activity. You should join. You can join for free just by signing up at marketrebellion.com. That is marketrebellion.com. Sign up now. Join. I think you'll love it. And I know those guys will appreciate you being on and offering some questions to the team. Thank you, folks. I'll see you tomorrow for my workout video. I'll see you tomorrow on halftime. And then, of course, I'll see you tomorrow for 3 at 3. Bang.